Welcome to the Opening Bell Report.
Okay, let's just jump right in. The date is February 10th, 2026. And if you were, watching the market this morning, maybe with your first coffee, you probably did a double take when you saw IREN.
Iris Energy, yeah.
I mean, the stock just absolutely ripped. We're talking a 10.3% jump in one day. It closed at $46.15.
And that's the kind of move that just screams massive earnings beat. You see a green candle like that and you think, okay, the CEO just announced they're printing money.
Right, a total blowout quarter. But, and this is where it gets really interesting and frankly a little weird if you're not in the weeds, they didn't beat.
They missed, and on the surface it looked pretty ugly.
Exactly. Revenue's down, Bitcoin mining revenue specifically just fell off a cliff, and yet the stock is acting like they just announced a cure for something. So I think the mission for this deep dive is to figure out why. Why is a company with an earnings miss rallying this hard?
It's a great question, and the analysis report we're looking at today argues this is really just the warm-up. This isn't just some weird market fluke.
So this isn't just a one-day thing?
Not at all. The report we've pulled suggests there's a huge structural re-rating happening. I mean, the consensus analyst target is sitting around $72. That's a 56% upside from today's close.
And that's just the average, right? The consensus.
The consensus, yeah. But then you get the Super Bowls. You've got firms like Cantor Fitzgerald talking about a target as high as $136.
Whoa, okay, hold on. From 46 to 136, that's almost a triple.
It is. And to understand how an analyst can even get to that number with a straight face, you have to completely ignore the earnings miss headline. You have to look at what this analysis report is calling the IREN pivot.
The pivot.
It's not about mining Bitcoin anymore. It's a fundamental change in, the company's DNA.
Change in DNA is a strong way to put it. For years, IREN was just that green Bitcoin miner. That was their whole brand.
And it was a great brand in 2021. But the market puts Bitcoin miners in a very specific box. And that box is labeled high risk, cyclical, super volatile. But the argument in this report is that IREN has climbed out of that box. They're not a crypto proxy anymore. They're becoming an AI infrastructure play.
Okay, so this is the identity crisis part of the story. Let's get into the mechanics here, because I feel like we've all heard AI pivot a million times. Every company slaps AI on their slide deck. Why is this one different? Does just changing the label actually change the math?
It changes the math completely. This is the core of it. Wall Street uses different calculators for different industries. If you're a Bitcoin miner, you get the miner calculator.
And that means what?
That usually means a PE ratio, price to earnings, of around 10x.
Okay, so just to be clear for everyone, a 10x PE means you're willing to pay $10 for every $1 of profit the company makes.
Exactly. And 10x is pretty low. It tells you the market thinks that dollar of profit is risky. It might not be there next year because, Bitcoin's price is all over the place. It's low quality revenue.
Shaky ground.
Very. But now look at the AI infrastructure calculator. We're talking data centers, cloud compute. Those companies trade at a 30x PE ratio, sometimes higher.
So 3 times the valuation for the same dollar of profit.
Because that revenue is seen as high quality, it's sticky, it's based on long-term contracts, not the price of a digital coin. So the aha moment isn't that IREN is suddenly making more money today. It's that the market is realizing it needs to swap out the 10x calculator for the 30x one.
That is such a powerful concept. You don't even have to grow earnings to triple the stock. You just have to convince the world you're in a different business.
In theory. But you can't just say it. You have to prove it. And the report shows how IREN is doing that. Look at the revenue. Old IREN was, 95% from Bitcoin mining?
And new IREN.
New IREN is targeting $3.4 billion in annual recurring revenue, AR, just from AI by the end of 2026.
And that word recurring is doing a lot of work there.
It's everything. Bitcoin mining is transactional. You mine, you get paid, you wake up and do it again. AI revenue is contracted, 3, 5, 10 years. That's predictable cash flow. That's what gets you the big multiple.
Okay, but anyone can project revenue. I can project anything I want. Where is the proof? Where's the receipt for this $3.4 billion?
And that brings us to the anchor of this whole thesis, the Microsoft factor.
The $9.7 billion deal.
This is it. This is the concrete proof. They signed a $9.7 billion AI cloud contract with Microsoft. You do that, and you're not just some company saying you're doing AI. You are a core utility provider for Microsoft, period.
That's a massive stamp of legitimacy, but I have to play devil's advocate. A deal that big has huge execution risk. I mean, it is incredibly expensive to build this stuff. Where do they get the cash to buy all the GPUs for a $9.7 billion contract?
That's the classic winner's curse, right? You win the deal, but go broke trying to fulfill it.
Yeah.
But the analysis points to a really critical financing update. IREN secured $3.6 billion in specific GPU financing.
Okay, so they took on debt. What were the terms? That's what matter.
This is the kicker. The interest rate is less than 6%.
Less than 6% in this economy.
Yeah.
That is incredibly cheap money.
It's basically free money for this sector. Think about it. Bitcoin miners usually borrow at like double-digit rates. Lenders are terrified of crypto.
Right, because if Bitcoin crashes, the mining rigs they hold as collateral become expensive paperweights.
Exactly. So getting $3.6 billion at under 6% is a huge signal. It tells you the banks looked at the Microsoft contract, not the Bitcoin rigs, and said, this is money good. They're lending against Microsoft's credit rating.
That is a really key distinction. The low rate isn't just about saving on interest payments. It's a vote of confidence from the lenders themselves.
Precisely. It de-risks the whole execution side of the equation. Can they afford to build it? Question is, pretty much off the table.
Okay, so they have the demand from Microsoft and they have the capital to build the supply. So let's connect that back to the valuation gap. How do analysts actually get to a $72 price target from here?
It all comes down to a peer comparison. You have to look at what the report calls pure play AI data center stocks.
So companies that have always been in this business, no crypto baggage.
Exactly. And right now, those pure AI infrastructure companies, they're trading at anywhere from 15x to 20 II sales, not earnings, sales.
15 to 20 times revenue. And where is IREN right now?
Okay, so IREN's market cap is about $15.3 billion. If you use that projected $3.4 billion in AI revenue, their implied multiple is about 4.5x sales.
So wait, 4.5 versus 15, that's a massive disconnect.
That's the whole opportunity. That's the value gap. The market is still pricing IREN like it's half a miner. If IREN gets even half the valuation of its peers, let's say it just goes from 4.5x to 9x, the stock price doubles.
So the argument isn't that IREN needs to be the best AI company ever, it just needs to be valued.
Yes.
Normally.
It just needs to stop trading this huge discount, the $72.29 consensus target. That assumes only a partial re-rating. It's actually pretty conservative.
And the Super Bowl's at $136.
That assumes a full re-rating. That the market totally forgets the Bitcoin history and values it purely as a high-growth AI infrastructure play.
It does feel like an asymmetric bet. The report mentions a low target too, right? Around $39.
It does. And look, a drop from $46 to $39 still hurts. But it's not catastrophic when you're looking at a potential upside to $136. There's a relatively high floor because of the value of their tangible assets.
Okay, this all sounds great, but I want to go back to the very beginning. They missed earnings. If the future's so bright, why was the last quarter so bad? Revenue was $184.7 million versus an estimate of $229 million. That's a big miss.
It was. And Bitcoin mining revenue specifically fell 23% quarter over quarter. If you're an algorithm just reading that headline, you sell. Instantly. It looks like the business is collapsing.
So why does the report call this the bear trap?
Because you have to ask why revenue dropped. Was it Bitcoin crash? Did their machines break? No. The report says IREN is literally unplugging its Bitcoin miners.
On purpose?
On purpose. They are physically ripping out the Bitcoin rigs, which make good money, to make room for the AI racks, which make fantastic money.
That's a wild move. It's like a restaurant closing for a month to do a renovation.
That is the perfect analogy. Imagine a burger joint shutting down to install a high-end steakhouse kitchen. For that month, revenue is zero. The headlines would scream, restaurant sales collapse.
But they're just upgrading from $5 burgers to $50 steaks.
I love that, yes. The miss was actually a bullish signal. It means the transition is happening. They're clearing the floor. They're sacrificing short-term dimes for long-term dollars. But the market panicked at first. That's why the stock dipped to $40 after earnings.
They call that a flush out, right?
A total flush out. All the crypto tourists, the people who only owned IREN for Bitcoin exposure, they saw mining revenue fall and they ran for the exits. But the key question is, who bought all those shares?
Somebody had to. The volume was huge.
The institutional AI investors. The big funds that only care about that Microsoft contract, they saw the dip to $40 as a gift. They don't care about a temporary drop in mining revenue. So you had this massive rotation of the shareholder base.
Out with the crypto crowd, in with the infrastructure funds, and that explains that sharp V-shaped recovery we saw.
Exactly. So for anyone listening who's intrigued by this, what should they be watching for now? This is a show me story.
They have to deliver.
They absolutely have to execute. And the report says the next 30 days are critical. We're not waiting for the next earnings report. We're waiting for operational updates, specifically the deployment of that first batch of GPUs.
What was the number? 140,000 GPUs.
140,000, which is just a staggering amount of compute, enough to train some of the biggest AI models out there. The next catalyst is the press release that says they're plugged in, they're running.
Because that's when the cash register starts ringing on the Microsoft deal.
That's it. Revenue recognition begins.
And for the chart watchers, the technical analysts, what are the key levels to watch?
The report highlights $45 as
Eh.
the big one. That was the old ceiling, the resistance level. Now that we're above it, it has to become the new floor. It has to turn into support.
The buyers have to defend that level.
They have to. As long as it holds above $45, the trend is healthy.
And the breakout level, what's the green light?
$50. A solid close above $50 confirms the correction is over. That's the signal that the next leg up has really started.
So hold $45, break $50. And the big picture is that the street sees $72 and the Super Bulls see over 100.
And right now the market is just, I think, starting to believe it's possible.
So let's wrap this up. We have a company that's in the middle of this messy but potentially hugely lucrative divorce from its old business model.
Breaking up with Bitcoin to marry AI. And yeah, the breakup costs were all over this last earnings report. It looked ugly.
But the dowry is a $9.7 billion contract with Microsoft and a potential re-rating that could double or triple the stock.
That's the story in a nutshell. And that cheap financing suggests the smart money thinks they can actually pull it off.
It's just a fascinating case study in how markets value identity. It really makes you think. You have the same building, same power, same land, but you change the sign on the door from miner to data center, and poof, you're worth 3 times as much.
Perception is reality in the market, until the cash flow proves otherwise.
I want to leave everyone with a final thought on that. We spend so much time trying to find the best company in a sector, right? Who's the best chip maker? Who's the best retailer?
And usually, the best company is already priced like it's the best company. The market's pretty efficient that way.
Exactly. But maybe the biggest opportunity isn't in finding the best performer. Maybe it's in finding the company that the market has simply labeled wrong. If IREN is an AI giant wearing a Bitcoin miner's name tag, how many other companies are out there, maybe even in your own portfolio, that are just fundamentally mislabeled? Undervalued because the algorithms haven't updated their definitions yet.
That's where the real alpha is found, in those inefficiencies.
It kind of makes you want to look a little closer at the losers in every industry, doesn't it? Just to make sure they're not secretly renovating the kitchen.
Always check the name tag.
Thanks for listening to the
Don't forget to like, share, and subscribe for more.